Hello and welcome to Switzer TV Property. I'm Peter Switzer. On tonight's show, we take the pulse of this house price comeback right around the country with the chief economist of REA Group, Nerida Conisbee. And then we see what the founder of Century 21 or C21, Charles Tarbey, is seeing in the market right now. And we pinpoint good value suburbs. And then we learn what good buyers agents can bring to the table to help buyers with Michelle May, who is a buyer's agent. But before all that, let's just kick off with Nerida Conisbee on the state of the housing market. Well, the rebound of the Australian property market has surprised many people. Of course, doomsday merchants are probably out there cutting their wrists right now. And one expert who's been watching the market for some time, Nerida Conisbee from REA Group, really has been tipping that the market was going to do a lot better than what the doomsday merchants were predicting. But Nerida, welcome.
Thanks.
Is it even doing better than you expected?
It is. I mean, it's barely fallen if we have a look across Australia, and in many places it's actually gone better than it was doing prior to COVID. So it is better than I expected. I think fundamentally though, coming into this, we weren't in a financial crisis, we were in a productivity crisis, but rapidly you could see that the job loss was going to be very focused on young people and that affected the rental market. But the banks, on the other hand, were still prepared to work with people because they were so well capitalised. So I think, going into it, early on we could see where the problems were, and then eventually it just came through that prices weren't going to drop as expected.
Yeah. I guess in many ways, I think one of the early times we talked was when the banks were talking the possibility of a 30% fall. And you and I both doubted that one. But interest rates, you think they're the critical factor explaining why the market has this failure to fall?
It's part of it. If you have a look at the reasons why, I mean, part of it goes back to the fact that job loss is amongst young people, so hit the rental market. We've got incredible amounts of liquidity in the system, so that's helping with the supply of funding. Very low interest rates, which also helps. We've got banks who are prepared to work with people. We've got this incredible level of government stimulus, which has also helped. The household savings rate has gone through the roof. So if you have a look at what's happened to that, prior to COVID, it was around 6% of household income. It's now at about 20%. So people aren't spending on other things. There's just a whole lot of factors that have led to this situation.
And Kogan,
they're doing very well.
So somewhere in between money that was being spent probably on services. That's the funny thing, is that I used to look at retail numbers and say, we may well be overrating retail numbers because so many of us were buying services. Like, I even used to joke, I would go and get my nails done. Like a bloke like me getting nails done, but that was the modern world, I am on TV.
It's really not fancy.
If I was just simply a tradesman, I would never do it. But people get massages, people get people to do their pools. The services component of our spending has probably shrunk a bit because you couldn't do a massage. People are probably home allegedly doing their work but cleaning their own pool. All those sorts of things could probably explain where the saving ratio, why the saving ratio is going, but they're still buying stuff from Harvey Norman.
Yeah. I mean, you can look across a range of factors. You look at apparel, you look at entertainment, travel, all of those things. People at home don't need them. Completely down. I might come back up now.
It's quite amazing, isn't it, when you don't think about the structure of an economy until that structure is mucked around with by a government and saying, no, you can't go there anymore. Yeah,
I mean, the June inflation figures were fascinating if you have a look at that as to what happened. Things like, childcare dropped, so suddenly childcare was free for a time period, and so that had a big impact on inflation. People weren't driving, so petrol costs came down because, and then we had the petrol war between Russia and Saudi Arabia, so that led to a drop in pricing, and so we had this COVID has led to a lot of great big swings in a range of factors, and retail trade has swung around, household savings has swung around. So interesting from that perspective that we just haven't seen the same with house prices.
Are we going to see a bubble-like boom next year?
Yeah, look, it's a worry. I mean, already we're starting to see a lot of pressure emerging in places like northern New South Wales. I mean, Byron has hit a $1.7 million median now. We've got...
What was it before?
Oh gosh, it would have. I mean, it was hovering around the $1 million mark for a long time. So I have to have a look back. But you know, it's certainly seen a surge of activity. If we have a look at Sunshine Coast, you've got Sunshine Beach, which is just gone over a $2 million median. So you know, I think the bubble. You know, they're going to be in these regional areas, which on one hand, great if you own in those areas, but can be quite challenging for people if they are facing affordability and local employment issues.
Are we going to see a construction boom?
That will take a while to happen. So House and Land is doing okay off the back of Home Builder, but off the plan is going to take a little time to recover.
Yeah, because people actually want stuff. Like, so off the plan is like for an investor waiting for it to happen, isn't it?
Yeah, see, off the plan does rely on the investor market. So if we have a look at what is selling, it's stuff that was developed with an owner-occupier in mind or a first home buyer in mind. Anything that's trying to target investor market, whether that's offshore or local, is something quite challenged at the moment.
Now, Nerida, I've got a whole lot of questions here, but you know I never asked any questions anyway. You know,
I did see them.
I've got you here, and I know what my people watching the program want me to ask you is like, let's talk about the Airbnb effect that we were talking about. All those people who had Airbnb properties in Sydney and Melbourne CBD. What's happening there?
Yeah, that's doing okay. You know, tourism is interesting because Australians spend more overseas and overseas tourists spend in Australia. So if we can capture that spending that we would have spent overseas, then, you know, it does mean better news for the tourism sector. So Airbnb, you know, we were tracking the number of furnished listings that were coming onto our site early on in the pandemic, and it was a definite trend that, you know, we could see this surge of furnished listings moving from short-term rental to long-term, and you know that seemed to happen quite rapidly. We're not really seeing it happen anymore. So I think a lot of them are being converted back to short-term accommodation.
And so therefore in New South Wales country, people might be coming to the city, for example, to watch the grand final or something like that, so they use Airbnb? Yeah,
I mean, it's probably the CBD vacancies are the big issue at the moment.
That's why I would have been, because Airbnb in the Blue Mountains is just sold out because people go on holidays and they can go there.
Yeah, I mean, if you look at Melbourne, so City of Melbourne, the suburbs that comprise the City of Melbourne, we've got around 12,000 vacant apartments there at the moment. So if we have a look at what's happened from mid-March to now and where the increase in vacant apartments are, it is like 43% of them are in the City of Melbourne.
Have we seen auctions of those apartments to get an idea whether there are people willing to buy them?
Yeah, we're not seeing a subsequent increase, or we are seeing an increase in listings, but we've got 12,000 new vacant apartments over that time.
New vacant ones?
Oh, not necessarily, they're probably fairly new. Yeah. So 12,000 vacant apartments over that time period, but in terms of new listings, it's only about 100 up, so in that local area. So it doesn't look like people are selling out at the moment. If you are looking for a bargain, you probably could get a fairly decent bargain.
Yeah, I wouldn't be surprised to think that there would be young professional couples, for example, who their combined salaries could be quite big in a Melbourne CBD, who could be thinking to themselves, these apartments that used to be very expensive, to try and buy, would be a lot cheaper now.
Yeah, there's certainly a bit of first home buyer inquiry in those markets. I mean, actually Carlton's an interesting one. I've been looking this week at the areas where we've seen big drops in median apartments, and Carlton tops the list nationally. Their pricing's down around 22% from last year. So
and that's really close to the Melbourne CBD.
Yeah, and great location. I mean, they're probably the apartment. They probably focus more on students,
and
they may not be.
University students, Melbourne.
So they may not be the nicest to live in. Unless you like living near students. But,
but everyone's seen the block. You just renovate it and get Shayna Blaze in, and all of a sudden you're living in a fantastic house. All right, so that's that. The shift, I know Bernard Salt talked about it, you've talked about it, the shift from the rings around the CBD out to other suburbs or even to nearby country towns to the CBD. Is this continuing, or is it starting to slow down?
Look, I guess, on one hand we can see search activity and we know that that's accelerated a lot since COVID.
Yeah.
What's been interesting though, the ABS released data for the June quarter, which did show net movement out of capital cities into regional areas and the highest level that they'd ever seen. So, we know, that backs it up, shows that the shift is actually happening from a population perspective. But also pricing. We can see, again, in terms of median prices, that there are parts of Australia at the moment in regional areas that are doing well, and partly mining driven. If you go to places like Port Hedland and Karratha, we're seeing big uplifts off the back of all those iron ore exports. Central West New South Wales, Orange is doing really well. Northern New South Wales, Southeast Queensland, even places as like Warrnambool, what else? Mount Gambier. They're areas that they're not necessarily within commuting distance from a CBD, but are doing quite well at the moment.
Yeah, I'm thinking about Central Coast. The Central Coast would be a place where if someone had to commute 5 days a week, that could really be annoying. People do it, but it'd be hard. But in the post-COVID world where you might be able to talk your boss into, say, just seeing you twice a week, and therefore you're working from home 3 times a week, that would mean that properties on the Central Coast could be in greater demand. Are we seeing that?
Yeah, we are.
It's amazing how I can work these things out.
Yeah, you don't even need the data.
No, forget Ari, just ask me.
Exactly.
So that is
so
seems to be logical.
it was happening prior. If you look at places like Geelong has been one of the strongest regional performers for a long time now. So I think what's different now, we're continuing to see Central Coast do well, Wollongong, Geelong, but now it's extended beyond that, and places that aren't necessarily within commuting distance are doing pretty well.
Thinking about Central Coast, Gold Coast, Sunshine Coast, places you've talked about doing really well, when what hits the fan, they can really be down for a long time, and they can drop quite substantially, can't they?
Yeah, and you have to be careful. I mean, I suppose from, the most extreme example would be Karratha and Port Hedland. You've got pricing that's going like this, and so, you're not, if you are buying, now's probably not the best time. No. But, I think one of the, somewhere like, I always find Gold Coast very interesting because, we tend to think of it as a very high density market, but it's not really. The majority of homes are on pretty big blocks, and there is a land shortage potentially emerging in that area that will keep pricing more elevated. Sunshine Coast, the land supply is a little bit better, but these areas, coastal. Being near the beach, eventually they will become more and more congested, and as a result, pricing will increase.
And 20 years ago, the Gold Coast was very volatile. Do you think the change in demographics, the expansion out of Brisbane, and all those sorts of things, and the potential of the Gold Coast is going to make the prices less volatile?
I think Gold Coast definitely, and I think the main reason being is that it has become more of a, the economy there is not relying on Brisbane, and so...
They're not even relying on tourists from the state anymore.
No, they're just relying on themselves. So, I think that has really helped the Gold Coast market. I think Sunshine Coast is similar. Northern New South Wales, I don't think that the level of price growth that's been occurring, I don't think, it can't continue to be at that rapid rate, but there does seem to be some sort of shift that's happened there, and as a result, lots of people moving create their own economic growth, so that seems to be the case.
Okay, I've asked you all the easy questions, now the hard one. What has been, and if you need some time, you can think about it, what has been probably the most surprising aspect of all the stuff you've been watching on that REA website, which effectively is like a social engineering website, because you watch what we're up to, and we all go there and we scan through homes and whatever. What is the most, as an economist, what's the most surprising thing that's come out of this COVID-19 period?
Just trying to think. I mean, I suppose that interest in regional Australia was surprising. The level that it took up. I think early on we thought, people will probably move to the suburbs because they'd want a bigger home, and that showed up that we were seeing this, this shift in activity. So regional is interesting. Also, that interest in very, very expensive property. So that 10 million plus price category is so strong. You know, when we have a look at views per listing on those properties, it's more than quadrupled since prior to COVID.
Yeah.
So, you know, there's this definite flight to the regions, but there's also this flight to quality. And I think people are, you know, potentially parking cash in these very expensive homes with the view that they will hold value, which, you know, I guess it's not that surprising, but, you know, the level of interest is surprising.
Yeah, because at the beginning of the coronavirus period, those high price homes weren't attractive. They were actually struggling a bit, weren't they? But as time has gone on, what do you think's behind it? Is it the fact that we can't travel overseas? We're concentrating on something else that makes us feel wealthier or something?
Yeah, it could be that. I mean, very low interest rates is
Yeah.
helping. Can't travel. What else could be a factor? I mean, I guess, you know, coming back to the fact that potentially their whole value could be an issue. I mean, it's interesting actually, Knight Frank released a report on luxury homes globally, and what they found was that places like Auckland, Sydney, even Melbourne, Gold Coast, they have been holding value, but go to New York or London, you know, much of Europe they're not. So there does seem to be a very close COVID link between luxury and pricing.
That's interesting. One final one, you did mention how Byron Bay, the average price has got to close to $1.7 million. I know a friend of mine from Melbourne who happened to be in Byron. He actually bought a place in Byron and then sold his place in Melbourne. It was like, I'm not going back there, was his attitude.
Fascinating.
Yeah, it is really fascinating. I think a lot of people have started to reevaluate how they want to live their lives.
Yeah, I mean, it's interesting looking at that ABS data was so fascinating for population movements that we've seen the biggest move from Victoria to Queensland since the early 90s over that June quarter. So, you know, that's fascinating. But then even when we look at search activity, we see roughly around 1 million searches out of Victoria into Queensland every month. It's at around 2.3 million now. So
What's it called? That the Andrews exodus.
Yeah, that's right. Yeah, I mean, whether it continues, who knows? But, you know, certainly these months have been really hard for people in Victoria.
I guess potentially then, there could be some good buying in Victoria as people leave and the supply comes on the market. There could be
potentially. I mean, I suppose, you know, coming back to Carlton, you know, that market obviously hit by foreign students and low levels of rental demand. I mean, the pricing is looking very attractive there at the moment. So, you know, I don't think you're going to get a bargain in Toorak or Malvern, but, you know, I think for some apartment markets, I mean, if you are a counter-cyclical buyer, it's probably something worth looking at.
That's Nerida Conisbee from REA Group. We're catching up with Charles Tarbey, the founder of Century 21, to get an idea of how the real estate market is rebounding out of the COVID-19 challenge that started clearly in March, but things have been getting better, and with Victoria opening up their borders on November 23, it should even get even better again. Charles, good to see you, mate.
Thanks, Peter.
What's it like out there in the real estate market?
It's already rebounded in Victoria. I was looking at the auction results from the weekend just gone. Now, they've auctioned half of what they did this time last year, but their clearance rates were 73.5%. You know, and that
sounds like a healthy market.
That's
doesn't it?
Very quick bounce back. And I was speaking to a couple of the principals of C21 offices in Victoria the other day, and their biggest issue is stock, which seems to be the case around most of the country still. And I'll talk to you about that a little bit later because I've got some theories on that. But that's a pretty good rebound in terms of auction clearance rates. But I thought Canberra at 89.7% clearance rate on the weekend was astonishing, you know, when you think about it. But no, Adelaide's come in, pipped them at the post at 90.9% clearance rates. And the numbers are pretty steady. It's not like they only have a handful this week and, you know, double last week. They've been pretty steady numbers coming through in terms of auctions.
Look, we know interest rates must be the big push. Is there anything else that's making people buy?
It has been a lack of stock. That's been a really big issue. When you've got interest rates as low as they have been and people, there's a lot of government support out there and people are being concerned as to what impact that might have when it stops and so on. But with interest rates continuing to drop and not seeing any indication of increases for some time to come, people feel very safe, and it is incredibly hard to find property to buy. So you only need two people at an auction bidding against each other to make it work.
Yeah. Do you think, like, given your history, you've been in this game a long time, do you think when you see this kind of lack of stock, we then do see a building boom? Do we see new products coming on the market?
There's the scary part. We expected more stock. There was a lot of development stock out there when we spoke last year. There was an oversupply in some parts of Australia.
Yeah.
And I think what's happened with COVID and Royal Commission into banking, the lending policies have changed significantly.
Yeah.
And I was trying to do a modest development down the south coast of New South Wales a year ago. And the bank at that time just gave me such a hard time because of construction and development loans. A lot of the banks don't like to do them. And only in the last 2 or 3 months have they come back with a vengeance and saying, we want you to do them, we want you to do them, the paperwork's on the way, we'd love you to go ahead. So
it's a good sign for the economy, isn't it? That kind of, when banks are begging to lend.
Yeah, that's a shift in 12 months, and there's been a lot happen in the last 12 months. Now, I think some banks are still nervous about it, but that particular bank, Commonwealth Bank, have really impressed me with their energy to want to do things.
And the government is actually backing 50% of business loans as well, aren't they? So it is a new era, and that's probably explaining it. Let's go around the country. Hotspots that you're seeing, are there any that are really standing out that just do unbelievably well?
Unbelievably, I can go across the ditch, to my very, very good friends in New Zealand. Auckland market has gone crazy. Some of the people there are a little bit frightened it's gone too crazy. You go all the way across the country, across the ditch and across the country to Perth, same thing. Massive hotspots that, when I shouldn't say hotspots, that's the wrong word now, isn't it? You've led me into that.
Yeah, I have.
No, that's not a hotspot. We have to give it a new word now, new name. But
hot suburbs.
Suburbs, hot markets, I guess. Definitely Perth, and as one that we're watching closely, and it had to happen because it dropped so badly before, so it had to happen.
Charles, do you think a part of it also is the fact that because we can't go overseas, we can't even go from New South Wales to Queensland, people are at home and thinking, well, I'll either renovate this place or I'll buy a new one. Is that happening, do you think, as well?
Yeah, that happens, and a lot of people who renovate end up keeping their properties because they like them now. So that's a bit of
it's like that love it or list it.
Yes. But no, every marketplace that we're talking to around the countryside is a hot market. Whether you're in Queensland or Victoria now, they've had that chance to come out, or Tasmania or New South, all of them are really hot markets. And some of them are going way beyond what they've ever gone beyond. But again, we'll talk about listing stock in a moment, because I really want to make a point there.
Well, we'll do it now.
Well, I've noticed that every week there's a shortage of listings, and it was like 25% less stock than this time last year, and I think on one of our interviews we talked about Melbourne being 45.81% lower in stock than this time last year at one stage, just a few weeks ago in fact. Well, I've watched that progressively change, and this week, every week for the last 7 or 8 weeks, it's gotten better and better, and last week it was plus 0.95% of stock more coming in, and it reduced the amount of stock to 18.21% less than this time last year. So that is dropping. And every time that drops, it means if you're a seller, your opportunities are starting to change for the worse for you. Because right now, you've got a lot of buyers and not a lot of stock. As that changes and turns around, it's going to be
right, so your numbers were not necessarily clear as mud for people who are listening. What you're saying is that the stock is starting to... Okay. It could be because I'm an economist. I'm not trained to understand numbers.
I'm just a humble real estate
But are you
agent.
saying that the supply of stock is actually starting to increase?
I'm sorry.
Slowly?
It's getting better, yes.
And therefore, when you turn up to an auction, those buyers have alternatives to look at where...
Correct.
Okay.
Thank you for explaining that.
That's okay.
I know what I know
money,
in my own head what it is.
I made a lot of money explaining very intelligent people to normal people out there. That's what I do.
Oh, okay. Good.
All right. So let me throw another factor in, because this is a very good market for those who are selling. I guess the next test for this real estate market will be next March when JobKeeper comes off, and what kind of growth we've got in the economy?
Yeah, I think we will, as we're being weaned off JobKeeper, which I think is a fantastic idea. I think people will make adjustments as we move along, Peter, and I don't think that calamity that people have spoken about, because remember
the fiscal cliff they call it, don't they?
Yeah, well, thank you. Again, there's another level of education. That fiscal cliff that we were going to fall off or drop off when we talked about what the banks were saying about property prices just a few months ago hasn't happened.
No.
So I think that as we go into next year and people adjust more and more, businesses like mine will adjust. I haven't taken advantage of JobKeeper to a great degree. Certainly Century 21 hasn't taken JobKeeper, but I know other real estate companies have, and so we've just gone along with it. We've gone along with payroll tax, and we've gone along with all of the things, just so that I didn't find myself down the track with a problem, with a big bill. And I think that as we wean off those issues, we get further down next year, I think people will have adjusted by then. I really do. And I think the government may introduce an even further government subsidy.
Yeah, they may well target specific industries that really are in trouble. Travel industries and things like that. Until we're flying internationally, they may well need some support.
Well, I've cancelled flights again this week now with SA, so it's a difficult time for so many people.
All right, we don't let you escape without giving us some suburbs that are really coming on the radar screen for either investors or first home buyers. Yeah. Are there any that you'd actually say these are looking really hot?
Yeah, it's very hard to pick because there are so many that are. But those ones that I'd encourage people now to look in the worst suburbs in their area, because those property prices still haven't quite caught on, and they will be lifted by all of the other suburbs. So if you see an area where people talk negatively about, I'd start looking in those areas, because for me
it doesn't last forever.
It doesn't last forever, and if you want upside in terms of capital growth, you're not going to get it if you're jumping with everybody else in every location. So for me, pick the areas that are in between good suburbs, pick the areas that people talk about as average suburbs, and I think you'll find that that's where the next hotspots are going to be.
It's funny you should say that, mate. When we were young, we were looking in Darlinghurst and Redfern, because they were the next cheapest one from Paddington. But Paddington really hadn't even taken off then. My father-in-law came in. We got lucky. We got a place in Paddington, a little cottage. He walked in, looked at his daughter-in-law, and looked at me as I was a dope. He said, "Sell this as quickly as you can," because it wasn't Bondi Junction, it wasn't Double Bay, it was this next suburb on. And it's a good piece of advice. That's Charles Tarbey, founder of Century 21. Well, to get another take on what's going on in the property markets around Australia, and in particular, in this case, Sydney, I'm talking to Michelle May, who's a buyer's agent at michellemay.com.au. Michelle, thanks for joining us.
Thank you for having me.
So tell us about the world of a buyer's agent.
Okay. Well, as everyone knows, in the real estate industry, all the power really lies with the vendor and the real estate agent. As a buyer, it is my job to equalize that playing field for the buyers. My aim is to educate buyers, owner-occupiers and investors out there to make better property decisions, pay the right price for the right property and walk away from the wrong ones.
Yeah. What do you think are the standout mistakes that amateurs make? And amateurs are most of us, because most of us don't use buyers agents, and we all think we're professionals, but we're not. So what are the big mistakes you think people make?
Really, it's jumping in feet first. So not doing enough research as far as I'm concerned. So I think investors really need to understand the risks involved. So there's two kinds of risks. There's the investment risks of investing in real estate as a whole, as opposed to shares, for example. Because you're dealing with market volatility, you're dealing with the lack of liquidity that shares don't have. Gearing, the higher the LVR, the more chance the investor could owe money to the banks if the property is not worth enough anymore down the track. There's a lack of diversity. Obviously, you need a lot more money to invest in a property as opposed to a multitude of shares. And then, of course, there's also the specific risk to the property that you're looking to buy. You know, you're looking at vacancy rates, you're looking at potential tenant damage, you're looking at, you know, the location losing its appeal due to changes, you know, through infrastructure or whatever the case may be, but also cost of major repairs. So I think the lack of knowledge from that perspective is what brings extra risks to investors. So really, I would urge them to really think about what it is they're hoping to achieve and how are they going to achieve it.
Do you find the people inclined to get your services are principal buyers, people who are going to live in the property, or are investors more likely to want to access your services?
It's a combination of both. I think what both buyer pools have in common is that they realize that whilst they've been honing their skills as, you know, lawyers, doctors, you know, white collar workers or blue collar workers, you know, for many, many years, I've been honing my skills in buying property. And so for over 20 years, that has been my profession. And that's why I am now considered to be, you know, someone who knows their stuff. And we make a real difference in the types of property clients end up buying, from what they think they want at the beginning of the journey to the end. So I think that's the thing that most of my clients have in common, is that they realize that they don't have that depth of knowledge that we bring to the table. They don't know what they don't know. And so that due diligence and that research is what we bring to the table, as, you know, whilst they're working, we're working on that search for them.
Okay. What's the Sydney property market like in terms of supply? I keep hearing the supply is still pretty restricted. And as a consequence, what problems does that bring for those people out there wanting to buy property?
Look, I think it would be a mistake to throw Sydney on the one heap, because within Sydney there are lots of micro markets. So, you know, Clovelly is not behaving in the same way as perhaps Marrickville would be, or, you know, down the Shire. So then there's a distinction between houses and apartments. I don't think that there's a chronic lack of shortage per se in the apartment market. Having said that I do feel that the savvy buyers have now got a better understanding of what makes a good apartment. So they're sort of moving away from the new and off the plan and realizing that the older, less sexier build perhaps of the red bricks of the 60s, 70s, 80s are perhaps a more sensible investment. So those are actually a little bit scarce on the ground. Houses from the markets that I am in, particularly the inner west and the eastern suburbs, they are hard to come by for sure. I think that the risk for buyers is that particularly if they are on a deadline, that they are going to compromise in the wrong areas. So I think as a buyer's agent, my main duty is always to make sure that the buyers don't focus, you know, the focus doesn't veer away from quality. So there are non-negotiables and then non-negotiables. Now the non-negotiables are the ones that should always remain in place no matter what the market is doing.
Is there a resistance to buy apartments nowadays because of the structural problems and the panelling problems?
Oh, absolutely. I think, you know, what's been brought to the forefront in the media has certainly had an impact on how people view the new and shiny, you know, never knowingly under-cushioned styled apartments. They're actually understanding that you have to look beyond, you know, the shiny veneer, so to speak. And I think that's a good thing. And I personally, as a buyer's agent professionally, I've never bought anything that's less than 5 years old, unless we have a really good understanding of who the builder is and how it's been constructed, because there are various steps between design, approval, and then the actual finished products, and who is responsible for what. That's where it all gets a bit murky. So for me, I always advise buyers to, you know, use the things that are available to you, which are most importantly the strata report. Now, in order to understand how good the construction of the build is that strata report is worth its weight in gold, because you can see, you know, are there any issues? Have they had to take the builder to court? How interested is the strata committee actually in the running of the building? Have they got a plan in place? You know, so that's where it comes in focus, that you really need that history of the building to have a good understanding.
Yeah. What are the suburbs in Sydney that are surprising you from the point of view that they're actually quite good value?
Oh, that's a tricky one.
I know, but that's...
Because it's funny because by the time it gets reported in the media, actually it's already changed usually. So we find that neighboring neighborhoods, can act as sort of a yo-yo effect. So for example, at the moment, Clove Valley and that pocket is quite overheated. And then you find if you travel just a little bit further south to Maroubra, for example, or even across to the other side to, Rosebery and Mascot, those suburbs, whilst a bit further away from the beaches, obviously, they turn out to be really good value.
Yeah.
Because buyers are priced out the current traditional eastern suburb neighborhoods because there is no stock at the moment.
Mm-hmm. The suburbs to the side of very popular ones can be very good value, can't they?
Yes, absolutely. Absolutely. And that's why it's important for buyers not just to put in their desired suburb into any searches that you've got on the portals, but just also look wider, further afield, because you might find that, you might get tempted by something that looks, gives you that bit more value for money, a bit more space.
Yeah. What's your feeling about 2021? The kind of data we're seeing on vaccines in terms of beating the coronavirus, all looking very positive at the moment. Are you suspecting this house price rise that we've seen, over the last few months in particular, is going to heat up across 2021?
Look, there are several schools of thought. I think at the moment we need to understand that, buyers are very confident. It's never been cheaper to borrow. There's a lack of supply, which means that's driving that increase in prices. Now, the vendors to come to the market, it always takes a bit of time. There's usually a bit of a lag. I'm hoping and I'm thinking that when I'm talking to real estate agents in the market, they're telling me that, yes, there will be more stock coming on come January, February, which means obviously when there's more choice, there's less numbers of buyers per particular property. So that steep increase that we've seen, and it was reported recently, some suburbs are up to 20% median price changes, which is just phenomenal. I think that's actually not going to continue at that same level. But as long as there is a lack of stock in particular parts of the property market, obviously that demand will still continue because, it's, as I said before, buyers are in a very good borrowing position at the moment.
Okay. Now give us your 3 best tips for someone going to an auction.
Oh, okay. Do your research. So come prepared. You need to have a real understanding of what the property is really worth. You can do that quite easily through the sold sections of those domain and real estate portals. Look at what's sold recently with the same attributes of the property that you're going to look at. And so you really need to assess that carefully and also ask the agent for comparable sales and really be very analytical in analyzing, is it the same size? Does it have the same aspect? All that kind of stuff, and then determine what it's worth, truly worth. I always ask the agent lots of questions. I think the agent is sort of an underused tool that buyers really don't use enough. Ask him or her, who else are you expecting to be at the auction? Because you need to understand who you're competing with. Are you competing against a professional like myself, or are you competing against potentially the bank of mum and dad, or empty nesters, or other first home buyers? How many people will be there? I always make a joke. I always ask, is the domain coffee cart going to show up? Because if it does, it's going to be a fierce competition. So it's about that preliminary work that you do. And then you can also talk to your broker or obviously your buyer's agent or your bank to say, hey, I'm going to be bidding on this particular property. What are your thoughts in terms of value? Because it's all well and good that they've given you a pre-approval of, say, 800, but they are still going to individually value the property that you've signed on the dotted line for. And that may not be 800, that may only be 700. So be aware that whatever you end up paying on the day, that you've actually got the funds to pay for it.
Okay.
So yeah, it's what we do is all about risk assessment and just understanding and getting into the vendor's head. Where are they going? What are they doing? how prepared are they going to be on the day to sell?
It seems to me,
I think that's more than 3 tips, actually.
It's more than 3. But it seems to me, Michelle, that the experts or the professional-looking bidders at auctions often don't make their first bid until they know that the property is on the market. Is that an important thing to know before you start making bids?
Look, I don't think it is, in my personal opinion. I don't think it is at all. You're there to buy the property, right? And in order to be able to be in a position to buy it, if it gets passed in, for example, you have got to be in the driver's seat. Now, it's not the law, but it is common courtesy to negotiate with whoever is the highest bidder first. However, everyone else who has bid does have that right of refusal still to bring it up to a level where the vendor will accept it. I really don't think that should matter as much as it does to buyers. I think if you've done your research and you know what it's worth, you should be confident to bid and start the bidding. I quite often start the bidding because I know if it's been guided quite low, I can blow 80% of the buyers out of the water by making a really confident bid first off.
Okay. Michelle May, thanks for joining us on the program.
Thank you for having me.